Good morning, everyone. It is a Friday. It's been a good market week. Today we're going to talk about Apple earnings. There's been lots of earnings this week, most of them pretty positive. Inflation coming in line, and then we're going to talk about IPOs. So we kind of cap off this week. This is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. I'm going to let Corey kick it off with the more exciting news is what's going on with Apple, which is a major holding that we've had. And I think now that NVIDIA took a step back and Microsoft took a step back, I have to believe that Apple's probably the most valuable company in the world again. I don't know. I didn't look at the numbers, but I know those three were all fighting for that role. And I know NVIDIA took a haircut with the DeepSeek. So I'm sure that they pulled off the #1 spot. And then Microsoft was down about 5%. So take it away with Apple.
All right. Yeah, we're going to go right to the source today. So this is from Apple's website. These are their actual financial statements released yesterday after the close. You can see that total sales were up, 5 billion or so, mostly because of the services part of the business. And this is all that, App Store revenue, cloud space, any services product that they offer. But the real headline grabber is actually right here. It's gross margins. So while Apple's revenue hasn't been blowing people away, it reported a record gross margin. The profit left after accounting for the cost of goods sold was 46.9%. That's the highest gross margin Apple has ever recorded. And it surpassed their previous record was 46.6%, which was earlier in 2024. This services revenue, as it grows, it's a little bit higher margin business. Now, I do want to come down here, show you two other things. One, you look at these shares outstanding from Apple. They dropped those, instead of spending all their free cash flow and money on capital expenditures like many of the Mag 7 stocks are doing, they're essentially pumping all of it into buying back their shares. So if you owned 1,000 shares a year ago and 1,000 shares today, you now own 3% more of the business than you did a year ago. That's good as long as those earnings remain strong. If ever there was weakness, and then it could create a situation where it's like, oh, in hindsight, we probably should have used that money for something else. But there's no indication that that is the case. Couple other things of note. China was down 11% year over year. And I don't know exactly what they said about that, but it's not great. And then, the one that always gets me, Mike, is if you just look at their AirPod business, AirPods alone are bigger than a large chunk of the company.
Got mine right here.
Okay, yeah, here we go. If we're flexing, then I gotta show what I got too. But
okay.
Just their AirPods alone are bigger than many companies in the S&P 500. Pretty crazy. And then you can see those services down here. Now I want to highlight one more thing. If we go to the cash flow statement, and I want to give an analogy. So if you think about those Mag 7 stocks, I want you to think about all of them. Imagine that they're people at a bar. And in the analogy, NVIDIA is the bartender. So NVIDIA is just serving up everything that these people want. And Tesla's at the bar, they're drinking whatever they're drinking. And in Meta's at the bar, Microsoft's at the bar, Google's at the bar. They're spending as much as they can at this bar. And Apple's just sitting in the corner. They're not spending anything at this bar. They're planning to get some free drinks from all these companies spending all this capex at the bar. And the truth is, they're probably going to get some free drinks out of it, and they'll have some good artificial intelligence offerings that they didn't really have to fund. So that's kind of what's going on here. If you go look at any of Microsoft, Meta, Google, their investing activities looks like just a funnel for money to fly through. And yet Apple, because they're sitting on so much cash, their investing activities is actually generating additional cash. So Apple's playing the game a little different, and you know, it's working for now. The market's happy with their performance.
That's good. That's good. And Samsung, they're outside the bar in the street trying to get in. Right?
Okay, yeah, the bouncers got them. Yeah, we could
I
go
don't know.
down the list there. Has anybody gotten kicked out of the bar? They had too much.
We're not doing confessions of that on today's show.
All right.
Okay. Okay, let me hop over to inflation. So, a big nothing exciting. Inflation came in line at 2.8%, so in line with expectations. And no news is good news there. What's the market doing? So, you know, with inflation and Apple's news, and keep in mind Apple's the biggest company, so they'll have the most influence on the S&P 500. They are up today overall. Actually, let me just pull up Apple's. Let me pull up Apple. Where'd it go? Okay, I'm gonna pull up Apple stock. It's up 2.4%, so up a little bit. That might not sound like much, 2.4%, but when you take 2.4% against a $3 trillion company, it's a lot. So then the other topic I was going to hit today, and I saw this article, and it was Twin Peaks. So if you know what Twin Peaks is, it's some kind of restaurant. They're having an IPO, and I thought, oh, IPO, that sounds interesting. IPOs are always interesting. Let's see what IPOs are coming out this year, and they're looking at restaurants, and some of these may surprise you, but Panera, like I honestly didn't know right off the top of my head that Panera was a private company and would be IPOing.
It was public for a long time.
Yeah, we're gonna see another one that's like that. But like if we saw Jersey Mike's IPO'd a little bit a few months ago and made their founder very wealthy. Panera, I mean, I've eaten at Panera many times. Another one, Fogo de Chao. I haven't been there, but
Fogo de Chao.
I have not eaten there, but I love Brazilian steakhouses. So, put one in my area and I'll definitely try that one out. And then the last one is Inspire Brands, which owns multiple ones. Arby's, Jimmy John's, Sonic, Buffalo Wild Wings. I don't understand how they can own all these, but Dunkin' and Baskin Robbins. So they have a bunch. So, that one's got to be huge. And that one seeks a valuation of $20 billion. I know that at one point, Buffalo Wild Wings was public because I think I owned that stock 20 years ago. So at some point it must have went private. Obviously I didn't keep it, or I would know that.
Hey,
but
Mike,
yep, go ahead.
pull up a 1-year chart in a second of Brinker International, ticker EAT. Just that the restaurant sector has been
EAT.
so hot, and we
Brinker.
saw pull up a 1-year. We saw Chewy's got acquired last year. Kava and
so wow,
Sweetgreen.
there you go.
Look at that. What is that up?
And that includes Chili's and Maggiano's. Like I've been to Chili's many a time too. So yeah, it's up almost fourfold from $50 to $184. So
I shouldn't have been spending that money at Chili's.
Yes, if I'd have taken all the money I've spent at Chili's and invested it, well, I don't know. I'd probably be 20. I'd be 20 pounds lighter. I'd be 20 pounds lighter. Okay, so now this is the good side of IPO. So if you're like, oh my gosh, I wish I would have bought Brinker. Of course, we all do at $50 a share, and I'd quadrupled my money in a year. And of course, because I knew Chili's had good food, right? I don't know. But you know, I wouldn't have thought it would have 4 times. So you say
It's
IPOs.
affordable. It's affordable.
I love IPOs. You say that, but let me show you. I just wanted to say, let's look at IPOs in 2024. Now, I'm not going to go through them because there's hundreds of, there's actually 225 of them, but it shows what they IPO'd at and what the return is so far. And you can see it's like playing roulette because I see green and I see red. And I see sometimes we see some like Z space up 241%. Boy, I like that. And then I see right the same day linkers down 78%. Wow, that would not be fun to buy that IPO and lose 78% in a month. So if you scroll through this, you can see, and this is on stockanalysis.com, you can see that IPOs for a year like last year, where the stock market was up 25% basically, see all this red in here? This is IPOs. Now, what these founders have done is, or I shouldn't say founders, but whoever financed it, you know, they go IPO, they sell it to the public, they get their money right then. Now, some of them may say, like, you know, I'm just going to pick one here. BioAge Lab, they IPO'd at 18, it's at $4.78. Whoever IPO'd this in September is like, I'm so glad I got my money out of it. But if you're an investor, you got crushed. Now, going through and trying to figure all this out is it's like playing the, you know, the roulette wheel. Some are down 80%, some are up 100%. That's not, to me, a good use of investing time. So I'll go back even further and I'll just grab 2019. So we'll see now in here, you really can see it play out. Some are down 100%. That means they went bankrupt after the IPO. And some, you know, I'm not sure I've heard of this SI Time. It's up 1,467%. Wow. I wish I would have bought that one. But, you know, this is all hindsight. And you can see that when you scroll through, I'll be honest, I see more red than I see green. So, you know, you can always say it's great to buy an IPO and, you know, it could be the next Microsoft or NVIDIA, but it takes a long time and it's a lot of risk to it. Like here's one, Datadog. I recognize that one because that's in our ego stocks, up 428%. We did not buy it at $27 a share, but I wish we did. So you can see some other ones. Cloudflare, I've heard of them. You know, the ones that are up 800 or 1,000%, I'll probably recognize some of those names. And, you know, IGM Biosciences down 90%. Never heard of them. That's probably why
You
they're
wouldn't
down
have been
90%.
smiling if you bought Smile Direct Club for sure. I think they
Yes.
already went under.
Oh yeah, Smile Direct Club. There you go. So yeah,
Frown Direct Club.
down 100%. And yeah, so anyways, I just thought I'd show IPOs because I don't get a lot of questions on IPOs, but you know, there is the ability to purchase an IPO. And what happens a lot of times, not every time, but the first day, there's all this hype and everyone's excited and the IPO might go up. It might go up 20% the first day, but then they tend to come back to realism, to what they really are. And we're not in the business of trading in and out of IPOs, and nor would we want to be. So anyways, that's what we
Mike,
got.
on that,
Sure.
companies go public so late now that you're most of the time you're not really getting in on the ground floor through an
Correct.
IPO. Now, back in the 90s, like if you bought Starbucks when it IPO'd, or many different companies in the 90s when they IPO'd, you were on the ground floor. But just structurally, the space is different now, and companies have better access to private capital now. So it's a little harder to win in the IPO space now than it used to be.
And here's some companies I recognize. CrowdStrike IPO'd and up 1,000%. We were in that stock last year for a while, and they got added to the S&P 500. So there's someone that IPO'd in 2019 is now part of the 500 biggest companies. I see Luckin Coffee. Some of you may have heard that. It's a Chinese coffee company. Can't click on the ticker because I think they went pink cheat. But 11%. You'd say, well, that's not great. They're not bankrupt either. So I don't know. It's interesting to skim through this list, but you see the red. If I want to say 2/3 are red, at best 50% is red. Things that go down after 5 years, 50% of the time that's roulette. That's why we would not be in. We don't look at this list for where we're going to get our investments from. But I thought I'd show it to you. Okay. Thanks, everybody. Have a great weekend, and we will talk to you next week.